It's time for another market update, but this time, instead of me throwing up an infographic with numbers of how many homes have come on the market and how many have sold, let's actually talk about what those numbers mean and how they impact our marketplace. Housing is still pretty hot here. I mean, we're in the New York City metro suburbs and our areas are in demand because of access into the city. I'm starting to see so many more cars in those commuter lots, which means that work from home is starting to phase out and people are still going to need to go back into Manhattan. Now, the topic of conversation, what's going to happen in the next coming months? We are starting to see that all signs are pointing that we are moving into a recession, but that doesn't mean it's going to affect housing in the way a lot of people do. Pricing and values don't just plummet. We are not going to see what happened in 2008 happen again. That was because of over lending, predatory lending, and it was a credit mess. Right now, people have more equity in their homes than ever before. They have less debt than ever before, and they have better credit profiles than they probably have had historically. So with all these things, what has actually happened and what we really needed to happen was with interest rates rising, we were able to pump on the brakes and slow down the increase in values that were happening so fast. I mean, we were just seeing charts going up and up and up, and we could not sustain that. It would have been catastrophic had interest rates not gone up. So we are seeing what I called a couple weeks ago a great stabilization of pricing. And this is a great news for buyers. And it's even still good news for sellers, because for buyers, there's still fierce competition out there. There are still plenty of people who want to buy a home, and people are hedging against inflation right now. And this is the best way to do it. You lock in an interest rate, you lock in the cost of your housing and your shelter. You always are going to need somewhere to live. So find a place that you love that house. You can always refinance in the future if interest rates improve, or you make a move sometime, 7 to 10 years down the road if you take out an arm or you do something else as far as a mortgage goes. For sellers, this really does mean that you are going to have to put a little bit more effort into getting your home ready for the market. That means we may be looking at doing more repairs than we had been in the past couple of years, making the houses look as great as possible, staging them, styling them, and making sure that those buyers will have that emotional connection as soon as they walk through your doors. And I promise you, that is what gets top dollar for properties. So let's take a quick look at what we have been sharing over the past couple of weeks. Quick infographic, what's going on in Fairlawn. Just take a look at this, median prices. Let's just do 3 months from April to now. We started at $549 as a median price point. We are now at $635. I mean, that is a huge jump in median price points. And remember, when we're looking at data, we're looking at homes that closed 3 months ago, but those transactions, those contracts actually went into contract 2 to 3 months before that. So we're looking at information that's even 5 months old. So we're kind of lagging a little bit here. We're looking at average days on market. They are actually starting to trend upward. So we're now at 44 days as an average. Now, this doesn't mean that homes aren't still selling pretty quickly. The median is 21 days, but this is what I was talking about before. Pricing is so important that if you don't price right and you're not strategic about your pricing, your home is going to sit on the market longer than it really should. And that's when we start to see price reductions happen. And we're starting to see more of those because people are overpricing their homes and they are sitting. So buyers are educated, they are price sensitive, and they want to make sure that they're getting the best value because their dollar is not going as far as it was before. Inventory, as of today, there were 47 houses on the market, but when I counted, there were about 13 or 14 homes that were already in attorney review, which means that those properties have accepted offers, so they're not even available anymore. So we're down into the 30s right now of how many houses are on the market. Fairlawn has about 11,500 households. So you can do the math. I mean, the percentages are just not even there anymore. We are still in a very, very strong seller's market. Let's talk a little bit about the amazing newsletter that SEG and the Cohen Group put out just a couple weeks ago. This is packed with awesome information. We really do try to take the information that we are getting out there and put it into bite-sized nuggets that we can then give to you to understand what's actually happening out in the economy and in the housing market. We are listening to the top analysts and economists so that we can give you this information that is easy to understand, because it is complicated. So like I was saying before, we are not in a housing bubble. It is directly related to a supply and demand in inventory issue. We just do not have enough homes to sell all the people that want to buy properties. Now, this little graph here shows that historically, like I was saying before, homes do not lose value in a recession. Actually, the only time that they did was 2008, but that was because of that credit mess. Let's look at this. This to me is probably one of the most interesting infographics that we have in the newsletter. And I think this shows on a social level what's been going on. Now, millennials, Gen Xers are the biggest demographic of buyers right now. And boomers are also buyers and sellers. This shows right here that all of these millennials came into the market a couple of years earlier than expected. The Gen Zers were supposed to be, buying and selling right now, but we had this increase in millennials during the pandemic that wanted to jump in and try to take advantage of those low interest rates because the affordability factor was there. Now, what was happening, these millennials that were first-time buyers needed those starter homes, and these boomers that needed to downsize were all competing for the same house. And because we already had a lack of inventory and because people weren't really moving at all, this is where a lot of the problems started to happen. So I just think that this is a really cool explanation of what we saw happening out there. Right now, homeowners have more equity in their home than ever before. They're also the most financially healthy. They have very little debt and they have a lot of savings. Good pup playing with their dog. Appreciation, again, we saw from 2021 all the way up to 2022, look how much this increased, but look at, we're also starting to see the plateau of value. Lastly, we can see again from Q1 of 2012 and up to 2022 over the last 10 years, how values have gone up. And again, we're starting to see that plateau. So this is all just perspective. And we are a little bit at a turning point here, but the ball is very much still in the seller's court. And it is still a very strong seller's market until we get more homes on the market and out there, it's just we're just gonna continue to see the same thing really. Now, this is what I was talking about before, getting your home ready for the market. And this is, we have the crews, we have the vendors that will help to transform your home to make sure that it looks the best that it can for the market. I mean, which house would you want to buy? And just so you know, that's the same room. So what does this all mean? Buyers, hedge against inflation, lock in your cost of housing. You can always refinance if rates ever drop. And sellers, you have the most equity in your home right now. So this is the perfect time to sell, to make the move into the next phase in your life. So let's quickly just recap here. And remember, this is not 2008. That was a credit mess. This is not. Homes have more equity in them, and we are watching lots of different markets. We're watching the commodity market. We're watching the builders and what they're doing, because that was a big conversation. Builders couldn't keep up with demand, but now they're starting to scale back. Commodities also dropped. So is that going to start to change things as far as how much it's going to cost to do a renovation now? We're watching all this for you. Low inventory, it's going to continue to fuel a seller's market. And buyers, again, this is the best way to hedge against inflation. Lock in those interest rates and you'll benefit from home ownership. So you guys know I love talking about this stuff. And if I don't have an answer for you, I know exactly who to get the answers from. We follow some of the smartest, brightest people out in the industry, top analysts, leading economists. We have conversations with them on a daily basis. So if you're thinking about selling, let's start that conversation now, even if it's not for another year or two, because there's a lot of work that goes into getting a home ready for the market, decluttering, working with organizers, starting to pack up, repairs that, deferred maintenance that just hasn't been done. These are all things that we would go over. And if you're thinking about buying, you're going to want to have the best team on your side. We are the 1% of realtors in Bergen County. SEG and the Cohen Group, we were in 4 markets in Bergen. We span all over the place, and we are hyper local realtors, and we know what we're talking about. We know what we're doing. We have the experience, and that's what you want on your side when you're trying to purchase something. So call me, love to chat, and have a great week, everyone.